We know that, and it's getting worse. How do they finance that? They finance that by issuing a bond. Okay, the bond gets an interest rate price gets set on that bond, which is a reflection of the supply and demand for those bonds. And if there is no demand, kind of by definition, that means the interest rate price has to get higher. And that higher interest rate price would then lead to more interest expense for the government, which it would kind of lead to what James Lavish has said so clearly is a debt spiral or a debt death doom loop. And so the federal government and the Federal Reserve have a real incentive to try and keep interest rates under control. That's a key piece of what they have to do, because if we went to, we're at on the 10-year now, we're in the fours, but we were at 5, and we saw how that created a problem last fall. Mm-hmm. And so if we went to 5, 6, 7, 8 on the 10-year and higher rates on or similar rates on the shorter durations, the government interest expense would blow out even further, and it's already blown out. It's over $1 trillion a year, up from much less than that 3 or 4 years ago. But and so it would accelerate the funding problem and the financial problem that the government has. And so as a result of all of that, the government and others are looking for ways to find more buyers of those bonds, and because to the degree that they can find a buyer that creates supply or creates demand, which how they're going to do this, I'm guessing this will come out sometime in the next few months. And this letter was a shot over the bow.
Coin Stories is brought to you by BitDeer, where the power of Bitcoin mining is at your fingertips. As a publicly traded leader, BitDeer's global reach and scale means they're everywhere you need them to be, ensuring you're part of the thriving Bitcoin economy. BitDeer's not just mining, they are industry pioneers, and BitDeer stands alone as the only vertically integrated, technology-focused Bitcoin mining company. What does that mean? Well, they're not just deploying, but developing the latest tech to make Bitcoin mining more efficient and effective. With the industry's most experienced leadership team, innovation is in their DNA, and it shows, with a quarter of their workforce dedicated to research and development, pushing the boundaries of what's possible in Bitcoin mining. Now they're leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join BitDeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. Yeah, and as you pointed out, and James Lavish talks about, the Treasury auctions have been pretty, not maybe a bit.
Let me make a couple things straight. I think gold is going to do incredibly well in the monetary debasement that's coming, but I think Bitcoin is going to do much better than that. And so as an investment manager, my job is to earn the top risk-adjusted return for my clients. And I view Bitcoin as a better risk-adjusted return than gold this far into the game. And now having a lot of the risks in my mind in Bitcoin gone away. Perfect example, one of the biggest risks I think in Bitcoin until the ETFs, was TradFi looked at it, or most investment pools looked at it and said, how can we invest, and Saylor made this point, how can we invest in something that we think the government might shut down? And, when the government approved the ETFs, they more or less gave the green light, say, well, we're not going to shut it down, at least not now. There might come a time when, they're in distress and they decide they want to shut it down. That's a whole different discussion, but that's a few years out. And so, I think with the endorsement of the ETFs and the recognition that those funds are now going to flow into it, this is no longer just a niche form of sound money. This is mainstream sound. The reason that worked, the killer stocks, if you really look at some of the greatest stock returns that have been made in the last 30 years of investing, they've generally been in the base layer of something that grows and spreads to become ubiquitous. Mm-hmm. And they've got kind of a monopoly position and a network effect. So I put in that bucket, Microsoft was probably the first one. Google is another one. Facebook is another one, all the FANGs. And then frankly, I think, the most recent, and by the way, you're a little too late on all those. You can still buy those companies. They are still monopolies. They will grow, and they're fabulous companies. But the big gains have been made in all of those categories. This is buying, Bitcoin right here is buying Microsoft in its first 5 or 10 years of existence, right? Yeah. This is the base layer of the new form of money, and so this is why, and I don't think most investors really understand this. And I have to say, I give myself pretty low marks for not really understanding the value of these. And Saylor did get it because he played in the .com thing. And I was involved in the .com thing. And what I should have realized is that there are going to be network businesses built here that have enormous value, and I should have started looking for them. And I was looking for them. I looked at, as an example, I looked at Amazon, and I thought, this is really interesting. It's not just books anymore. He's selling all kinds of stuff, but he wasn't making any money. And so
Right.
I took my TradFi lens, and I said, hang on a second. I'm a Warren Buffett guy. I want a low PE stock that's going to, and there was no profit. And little did I realize that what he was doing was, gaining share, and that eventually he would have the entire market, and then he could generate a profit. So,
Right.
and so I missed it. I completely missed it.
It's fascinating to hear those stories. I had a friend I was talking to in Los Angeles about a month ago.
Broader question of where are we in the market cycle? I mean, there's nothing about the stock market that's cheap today, but that doesn't mean it has to fall. If the money keeps flowing, it does represent a hedge against inflation. You're buying operating companies that in an inflating world will be able to reprice their services or their goods. The bond market is a totally different story. I think the bond market's in a lot of trouble and about to be in a lot more trouble. And that's why, the government is doing the things like this SLR thing we're talking about. Um, you know, we know for a fact that the way the system is constructed, and that is to say that the debt is growing faster than the GDP, which services the debt, that this cannot go on forever. Stein's law, it has to end. Particularly with interest rates going up, which makes the problem even more acute. I mean, part of the reason we got so far out over our skis is that we were in an environment where interest rates are falling, and that's not now the case. My guess is they may come back and drop interest rates, but my sense is there's a chance, Natalie, that have notes on
Right.
buildings that we can all see, or you see these $80 million purchase price or cost to build buildings being sold for $20
Yeah.
million. Well, a lot of debt was used in that case. A bank holds that note. That note's gone to money heaven. So
Yeah.
so there could be another problem coming, and I think the bond market could start to fall apart, and they could have to institute YCC. I mean, look, the thing I will say in their defense is they're damn creative at printing money in lots of ways and not talking about it and saying it's not printing money. I mean, the BTFP was printing money. I mean, you give us your shitty loan for 70 cents and we'll give you back a
Right.
dollar. I mean, that's
Well,
printing money.
it's interesting that you say that, because before I had the opinion that all of these people are completely incompetent and have no idea what's going on. But
I think it's just pure calculated self-interest on his part. Biden did something recently that I'm pretty sure it's Warren, not Biden, but it just annoys the shit out of me. This whole notion that they're going to try and tax the miners 30% on their energy consumption. I mean, that would just kill the mining.
right.
I don't think it'll ever get through, and it would just kill the Bitcoin mining, industry in the United
It's going to
States.
send it. It's going to send
It
it
would all go
elsewhere. Yeah.
overseas instantly. Yeah, I mean, tons of jobs and economic activity and et cetera would all be lost. I think it's a non-starter. I don't think there's any way they'll get that through.
Yeah.
But look, it strikes me that over time, the politics are going to reflect what the on the ground conditions, and the on the ground conditions are going to be Bitcoiners are doing well, and Bitcoiners are a big voting block, and Bitcoiners are going to be wealthy when these coins are worth $1 million a coin. And I could easily see, I have this sense that sales